All right, in the previous video, we asked ourselves certain questions to potentially get to the trading plan that we want to use. Now we need to understand a trading plan is built on foundations. And I don't necessarily mean the foundation levels here. I mean, we either use a filtering process trading plan or we use a flow trading plan. Hybrid trading plan is again, filtering process and flow combined a little bit, but it starts with a filtering process. So a trading plan starts off with understanding either how the filtering process works or how a flow trading plan works. Now, a filtering process starts off with understanding as well the foundational levels that we use right here. When we talk about those foundations of the trading plans, so either flow or filtering process, we mainly talk about bias and narrative because those are going to be different in a filtering process and different as well in a flow trading plan. Now, of course, the timeframes as well change. So when we talk about timeframes for a filtering process, I am talking about the following timeframes: monthly, weekly, daily, and 4 hour. If we talk about the monthly, that's the first timeframe to go over. After that is the weekly, after that is daily, after that is the 4 hour. The 4 hour only use if it's inside bigger context. So if I can't find context on the monthly, weekly, or daily, then I don't go into the 4 hour to force context. If there's already daily context or already weekly context, already monthly context, then going into the 4 hour is perfectly fine to find certain context as well. These are the timeframes that we are going to be using for bias, narrative, and context right there. Then of course, we're also going to be using 1 hour, 50 minutes, 5 minutes, potentially 1 minute for your load time from entries. But when we're talking about bias, narrative, and context, these are the timeframes that we are going to be focusing on. Then right here, we move on. We see news. News is very important when we start off with the filtering process. This is the first step in the filtering process after understanding the timeframes that we use. When we talk about news, we again talk about Forex Factory. And when we go to Forex Factory, we will see certain news. For the Forex majors right here, and the Forex majors is all the ticker names that have US dollar. So Euro US dollar, GBP US dollar JPY, those are the Forex majors. When we have US dollar on that day, that's exactly a day that we potentially want to look at a Forex major. Red folder news is what we want to trade. We want to again remind ourselves, avoid the big three. For Forex crosses, we want to focus on orange and red folder news right there. For crypto, you can again focus on cryptocraft.com. Miscellaneous right there. Indices, you need a little bit less of news. And for indices, I personally would advise a filtering process trading plan on the indices is not necessarily the best trading plan foundation. If you're looking to trade the indices, I would advise maybe look at a flow trading plan instead. For crude oil, we want to focus as well, and we want to take into account crude oil inventories, which is actually a yellow folder news on Forex Factory. So keep that in mind as well, smaller the detail. So why do we talk about news? Because if we go to forexfactory.com, then we will see certain news events. Again, smaller reminder, I have it set as the following right there. The only thing that I have turned off right there is yellow folder news right there and CNY. Again, yellow folder news is only relevant if we have crude oil inventories. The rest is not relevant for me. Now, when we look at the beginning of our week and we start our filtering process, we take a look at the economic calendar right here. We already know where the volatility for certain pairs is going to be. So for example, on Monday, we have CHF news. Tuesday, New Zealand dollar news. So I already know, all right, on Tuesday, that might be quite volatile for certain New Zealand dollar pairs. So for example, New Zealand dollar CHF, that's one I might look at. Then we also have US dollar right there on Wednesday, core CPI. That's one of the big three news events. Again, what are the big three news events? CPI, NFP, and FOMC statement. So I want to avoid the day before a US dollar big three news event and the day where the news release is itself. So Tuesday, I want to avoid for the US dollar. And Wednesday, I also want to avoid for the US dollar right there. So my main trading for the US dollar is, I already know, is going to happen on Thursday right there and on Friday. because that's where we have US dollar red folder news, which is just normal red folder news. Then if I want to trade at the beginning of the week, and I know I'm not going to trade the US dollar because that is where we have CPI and we don't have a US dollar red folder news on Monday, so it's already not tradable for me. Then I want to focus potentially at the beginning of the week on the crosses, where we have CHF news, New Zealand dollar news. And then after we have US dollar, Canadian dollar, and we get some Euro and GBP as well. So those are the pairs that we can now focus on. When we understand the pairs that we can actually focus on and where the volatility is, so we have time agreeing with the ID, then all we need right now is price as well agreeing with that ID. So how do we understand when price is agreeing with the ID in a filtering process? This is where the filtering process starts. The filtering process starts right here with arguments. When we look at price, is there a clear one-sided bias? After we determine that, we can potentially move a pair to a waiting list. There's potential. We might only have a bias. Then after that, we can move it to the interest list. All the boxes are checked. Bias plus narrative is clear. Now, what does that then look like in a chart? Here we first go over the US dollar, and I start on the monthly time frame right there to potentially determine my bias right there. And if I take a look at the dollar right there, I can see, well, we've come above that swing high right there. We can potentially continue higher, come off that weekly vertical as well, took a rejection, already continue higher, perfect. Daily right here in the creation or potentially creating that daily value gap right there with an overlapping fair value area could be very interesting. And I believe we can potentially already continue higher off a 4-hour value gap right there as well with the fair value area right there as well. But we don't have clear context just yet, so I would prefer to wait on the daily instead of going into the 4-hour right there. Now, if we are talking about the US dollar, then the US dollar, of course, that's the trend for all the Forex majors that we also see. For the indices, yes, the indices are related or are correlated to the US dollar as well, but I would argue a little bit less than the Forex majors. And the Forex majors is the ones you are seeing right there. Australian dollar, US dollar, Euro US dollar, GBP US dollar, and the rest on that list as well. So if we are going to go over the Forex majors right there, then what we want to do is we want to determine those arguments. How do I see arguments? The filtering process is a lot based on arguments. So when you go into a certain pair, I want to be 100% bullish or 100% bearish. I do not want to have an argument that could say, all right, we have a somewhat bearish price action, but I can also see it go up. No, I want to be 100% on one side of the market. So for example, here, Australian dollar, US dollar. Well, we have had these fair value gaps right there, and that fair value gap has been holding. This fair value gap has been holding right there, and we might create a bearish fair value gap right there as well. Then this fair value gap right there is not, or is getting disrespected right there. So we might actually get a bearish fair value gap. But overall, price action here has been consolidating for quite a long time. We have been stuck in this bigger range right there. So is that very high probability to move towards one side? I would argue not really. So here I want to be a little bit more careful. And there is somewhat of a bullish argument, but also a bearish argument. Yes, the most recent candles have been extremely bearish. But there's also, if we look at the previous price action, due to the consolidation, we might get some bullish price action as well. If we take a look at EU right here, this is arguably a lot more bearish right there. We had a clear established trend right there. We actually came into a weekly fair value gap right there, which Australian dollar, US dollar did not do. So EU right there has a lot more going for it. There's a lot better arguments to actually be bearish and to follow through bearish as well. Same for GU right here. GU has this weekly value gap as well, similar to EU right there, which AU, Australian dollar, US dollar, does not have. So that creates certain arguments. The arguments for EU and GU look a lot better. So EU and GU could move towards the interest list eventually, because they are looking quite interesting to potentially get involved. So then if we add them to the interest list right there, and I add them to the red flag right there, because when I add them to the red flag, that's my short interest list. And right here, When I've added pairs to the interest list, again, this in itself is now also a hierarchy. So am I going to trade every single one of these pairs on a particular day? No, with a filtering process, your filtering process work is done the day before you actually start trading. Then you start looking at, all right, which ones of the pairs are the most interesting. So right here, the most interesting that I determined was EU, GU, GBP Canadian dollar, and GBP New Zealand dollar right there. GBP Canadian dollar, GBP New Zealand dollar, we actually don't have news supporting the ID tomorrow. So for example, on Thursday, we don't have news supporting the ID to trade GBP Canadian dollar or GBP New Zealand dollar. GBP US dollar, Euro US dollar, we have because we have US dollar news. We also have Euro news. So Euro US dollar could actually be quite volatile. So in Euro US dollar and GBP US dollar, we can again determine right now what kind of arguments would there be for GBP US dollar to be higher probability than Euro US dollar. Well, let's see. On the daily right here, we are creating a daily value gap, very similar to EU as well. One thing I can already notice is that GU is a lot weaker right here than EU is. So EU will still come into this low that I can potentially sweep as well, where GU, the path towards the next low is quite clear right there. And after that, we're also reaching into a monthly value gap, which is, it has quite some area to run still. On the 4 hour, we actually already have this 4 hour fair value area as well right there, and a 4 hour fair value gap right there, which we can potentially continue lower from. EU, that's quite similar right there. So based on which one is weaker right here, GU, we could argue that GBP US dollar is a little bit higher probability. It has more arguments going for it. So that again would then create GBP US dollar at the top of the interest list. Now right here, GBP US dollar is the one, if I were to trade tomorrow, that is exactly the pair that I want to look at to trade. So again, the filtering process filters down the pairs, filters down the instruments to the highest probability pair, the highest probability instrument that you want to trade tomorrow or the next day or throughout the week. So we can have multiple pairs that could be very interesting, but the filtering process, like it says already, it filters down everything to find the most interesting. And that is exactly the one we want to trade. We want to find the highest probability. And when we compare, for example, Russell right here to GBP US dollar, GBP US dollar is what we determined, all right, this is quite high probability where we can already look to continue lower right there off that 4 hour value gap. So the bias is checked off. Bias is high probability. We understand the draw on liquidity is quite clear. It's quite obvious. We are most likely going to continue lower. Is the narrative also quite obvious? That's the second question we have to ask ourselves in a filtering process. If the narrative is also quite clear, perfect. That already checks all the boxes to move it to the interest list and to potentially trade it tomorrow. But if, for example, we take Russell right here, the draw on liquidity is quite obvious, as in we can still continue lower. But we have just reached a major draw on liquidity right there in the form of that low as well, where we see candle signs might actually support the idea that we're currently respecting that low. So here, do we right now have a clear premium rate and a clear new target to continue lower from and a clear draw on liquidity to actually look to target? No, not necessarily. Where this 4 hour value gap right there, yes, we can trade back into that, but we have a long wick at the top right there on the third candle as well. The retracement would be quite a big retracement to make to then continue lower. So here, the arguments are not really in favor to trade this tomorrow just yet. But there is potential. Why is there potential? Because the draw on liquidity is quite clear. As in, I think we can definitely look to continue lower as well. But I'm just not too certain on what we can continue lower from just yet. So what do? I move it to my orange flag right there. And my orange flag is the waiting list. Now from the waiting list, where eventually, if it does clear up, or for example, GBP/JPY right here does not have a clear discount rate and doesn't have news supporting the ID tomorrow. It's also when, for me, on the waiting list right there. And then after it can potentially move to the interest list. If we do have that clear bias, we have a clear narrative, and do we have news supporting the ID on that day that we want to trade? Perfect. Now I can move it to my interest list as well. Potentially it can be at the top of my interest list as well. So if there is potential in a pair, and potential in a pair is usually when there's a quite obvious draw on liquidity, but we just don't have a clear narrative just yet, then move it to the waiting list. Or at the beginning of the week, you see a pair where we have every box checked off except for news. We don't have time agreeing with the ID just yet until later on in the week. For example, what I did with all the US dollar pairs throughout this week, because we only had US dollar news supporting the ID at the end of this week. That's when it's on the waiting list for me, the US dollar Forex majors. Then afterwards, at the end of the week, I can potentially look to trade them as well. Now, this filtering process is an ongoing process, as in this creates a routine. And the routine right here starts on Sunday, most likely. Of course, for me, it's mainly Sunday. You oftentimes see in the forecast, I do exactly this filtering process. So I start looking at the economic calendar. All right, what can we see? Are there high probability pairs? So if you're really interested in seeing that in real time, then the forecasts are your go-to. That is where I go over the filtering process every single day, every single week as well. Now the routine right here starts again on Sunday. That's a general rule of thumb, because the day before you are going to trade, don't waste brain points. So the day the routine starts, the day the filtering process starts for your upcoming week, for your upcoming trading week, starts the day before you are going to trade. Don't waste brain points. Now, really quick, what do I mean by that? If we take a look at this week's price action or this week's economic calendar again, then on Monday, we only have CHF news supporting the ID right there. On Tuesday, we have New Zealand dollar. On Wednesday, we have US dollar CPI right there. So for US dollar, I already know the day before, because of CPI, I'm not going to trade. So Tuesday, I'm not going to trade. Monday, there's no US dollar red folder news. So I'm also not going to trade. We only have CHF news right there on that Monday. So that Monday, I am most likely, just simply said, not going to trade. So why would I waste brain points doing a forecast on Sunday and then Monday as well if I'm not even going to trade yet? Now, I can understand it from a standpoint as in you can keep in check with the market a little bit. But I would argue right there, if you just simply wait and just set zero expectations of what the market is going to do, then with a fresh mind, go into it on Tuesday right there, the day before you actually might start trading, and then start doing a forecast. You have saved brain points over someone else. So we have a competitive edge over someone else. Again, our edge, and in general, I believe a trader's edge lies in psychology. Of course, it all starts with understanding the technicals. But the technicals, our technicals are already quite advanced. We have an edge on the technical side most of the time. Psychology there, if we talk about psychology and why I believe we have a psychological edge, is because a lot of people try to trade or try to do forecasts, try to get emotionally involved with the market whilst they're not even looking to trade just yet. So if I do a forecast for CPI and I predict that the CPI on the dollar right there is going to move lower, let's say move lower. And then what we see on the US dollar is that it actually moved higher right there. Now, because I did a forecast, I got emotionally involved. So there's some ego involved right now. I am losing brain points. I am losing an emotional edge, a psychological edge over someone else. Again, the reason why we take certain traders' liquidity is not necessarily because of the technicals, I personally believe. It's more so who can keep their psychology in check the longest. As in, a lot of traders, and arguably 90%, 80% of the traders, they simply lose money. And the technicals are not the problem, because the technicals for some people work, for some people don't. So apparently the technicals, if the technicals were the problem, we could just teach everyone the same trading plan and everyone would be profitable. So it's not really about the technicals. It's mainly about psychology when we are actually trading, because the person that is constantly over trading, that is revenge trading, is going to act as liquidity to the opposing trader. Think about how many people on the opposite end of your trade are now over trading, are now revenge trading, are acting as your liquidity whilst you are simply getting involved on a normal trade ID. That is why most people are failing, because of their psychology, because most people can't stick to their trading plan and are over trading, revenge trading, placing trades at certain levels where they shouldn't be trading. That is our liquidity. So because people are constantly getting involved where they should not be involved. For example, right here, if I do a forecast the day before CPI where I know I'm not even going to trade, so why should I waste brain points? Why should I waste focus right there? I might as well get a competitive edge, save some brain points to then get involved and do a forecast later on. Because think, when it comes to that Friday or Thursday at the end of the week, and someone that has been so involved, and it goes even back earlier, where last week on that Friday we might have even had NFP, and that person who's trying to trade every day, who's wearing themselves out, getting into a burnout, and is still trying to trade right now on that Thursday or Friday, is not going to be sharp anymore, not going to be focused anymore, does not have the energy anymore to spot those good high probability trade setups. Where we are just fresh. We just came looking at the market right now. We already know what we should be looking for, and we go into it with a fresh mind. So our emotions can be controlled a lot easier because, simply said, we have more energy, we have more focus, we have more brain points. So on that Sunday or whatever day it may be, again, the day before you are going to trade, don't waste those brain points. If it may be a Tuesday, it can of course as well be a Tuesday. Then on that day, you are going to create a filtering process for that week. So you're going to filter out, according to the economic calendar, you're going to look at the economic calendar, and for the next upcoming week, which pairs can we actually look at? Then after, you're going to dive into the forecast list, the crosses list, to then see, all right, which one of those is actually supporting the idea of trading them according to price. So is price action itself actually looking good? Do we have a bias and a clear narrative, which is a high probability? Then we can add them to the interest list. Then on weekdays, you can consistently update your interest list as well. So at the beginning of a week, sometimes in forecast videos, you might see me select a lot of pairs because I go over quite a lot of pairs. I go over the full forecast list right there, and I also go over all the crosses right there to get to my filtering process trading ID. Now, again, do you need to go over all of them? If you find yourself that's a little bit too much in the beginning, then that's perfectly fine. Focus maybe on the most news events. So always focus on US dollar, I would argue. Then find, do we have a lot of euro news throughout the week? Focus on a lot of euro pairs as well. So if we have 2 or 3 days where we also have euro news throughout the week, perfect. We can also look at euro Australian dollar, euro Canadian dollar, euro CHF, euro GBP, euro JPY, euro New Zealand dollar. So you're fixated on 2 currencies for that particular week if you think, or if you find yourself in that spot that it's a little bit too much for you right now. That's perfectly fine. Now, after doing that, of course, I filter down a lot. Every single day, I potentially move certain pairs to, again, the breakdown list, where the breakdown list is the end of the week right there, where I go over all the pairs, why it wasn't a high probability, why it was high probability, things like that, which is also something you can do. So it moves from the interest list to then the breakdown list when it's not interesting anymore. I am extremely picky. And if you are using a filtering process trading plan, allow yourself to be extremely picky as well. That's your advantage over a flow trading plan, because you can go over so many pairs, so many different high probability scenarios potentially, that you can allow yourself to be extremely picky about price action as well. And if you're extremely picky about price action, you will find those A+ setups. This routine, again, I would advise to watch the forecast, because that's where you will see it in real time as well, where we go over it in real time and where you can see it in how I approach it as well. Now, right there, we move on to the last one, which is, again, practice. Find the highest probability pairs. Put them in the interest list, in your interest list. See which ones play out and which ones don't and why. So find, again, through news, which pairs can we trade? Put them in the interest list based on price action. Which one is the highest probability that we can actually look to trade? Then see which ones plays out and which one don't play out. And then also why. So write down what you think was the highest probability pair for this week to reach the drawn liquidity, to create that clear narrative, to then deliver towards the drawn liquidity as well. And then see if it actually plays out. Again, this is a great study. Even if you want to trade the flow trading plan, eventually this is still a great study because you will get a good understanding of what is high probability and what is actually low probability based on the arguments as well. All right, then we move on the next video to flow trading plan, where after we can move on to the hybrid trading plan as well. Perfect. Thank you.